There's the bell. Welcome to After the Close. My name is James Boyd. We've got Cameron May in the chat. We welcome him and all of you. Rice Bird, Grace, Scott, Lola, and many others. Welcome to all. Also, a quick reminder, if you have some questions, just know that Cameron May, a fellow instructor in the chat, he will be looking to see if you have any questions, and so will I. We'll talk about kind of some of the activity from the market here today, and also how it's maybe setting up going into tomorrow. Now, when we talk about after the close, what do you do after the close? Probably looking at some news updates, maybe earnings. Might be looking at, let's say, some positions. Where are some of the trends? Does the portfolio in the paper account, maybe are you looking to get in certain areas going into tomorrow and or Monday? We'll talk about all those things actually here today. So this would be some new and past examples, and we'll talk about where those trends are and also kind of where some of the activity was today. So just real quick as we get started, remember you can follow Cameron or myself on X. There's my handle. Cameron will type his handle in chat. We do post educational examples there and also announcements. When we also do talk about, as we bring up information, remember the information is provided for general informational purposes only. Options carry high-level risks and are not suitable for all investors. Also, when we talk about examples, we will use the Paper Money software application. Investing involves risk, and including loss of principal. And also, by the way, that could be unrealized gains too. That's the bad part. And oh man, that's the worst. Was doing so well until it pulled back. So we'll talk about that a little bit here as well. And also remember that the risk associated with dividend paying stocks is not limited to the risk that the stock may reduce or stop paying dividends. So that's up to the company. Now, also remember when we talk about examples, we'll take a look at things from a technical perspective, price and volume, but also some things fundamentally as well. Now, also remember today, I want to kind of take a look at just real quick where the S&P ended up for the day, just briefly. We'll also talk about some of the prices that we're seeing out there, just like gold, things like that, some of the major price levels. So first off, S&P closed. We talked about this level before. We were gapped down from. We did stay above it, 63.40. Okay, on the cash, on the S&P, 63.40. Still close above the moving averages, but did fade off the high. Okay. Now we'll talk about sectors in just a moment. Some that stood out. By the way, if you saw any stand out, let me know. If we take a look at the NASDAQ, we look at the gap down level, 23,218. We intraday wicked right down to that level. Clearly, someone was watching it. Maybe someone went to the webcast, okay, including institutional investors that saw that. That's those levels that I talk about and kind of how to read those. They kind of tend to repeat the patterns, don't they? And that's also not too far away from the moving averages itself. Decent bounce back. This day over day on the NASDAQ was higher. Now, I want to kind of just take a quick look at VIX where it ended. Luckily, we've seen the VIX fade from the high. A couple days ago, we were at 22, did fade down to 16. Always like to see when the price level is below both moving averages. Now, last Friday, we kind of talked about some of the things we were seeing on gold. Now, when we talk about after the close, we're kind of asking ourselves a question like, well, what had a decent move? What's in a trend? What's above support? And so on. What maybe actually had a decent close into the finish of the day? Gold. There wasn't even any feedback. It actually rammed all the way to the top. I'd have to zoom in quite heavily for you to even see the upper shadow. It's like a whisker, okay? After shaving, only after 2 hours. I mean, you can't even see it. So this is actually something that we're going to keep watching. And we got two examples that we need to discuss here today at the minimum. And so first off, when we go back to that 3-year weekly chart and we take a look at this, the other thing that we're seeing at the close is we are seeing those moving averages start to pinch. Now, a lot of times as U.S. investors, we're kind of thinking like what the U.S. investors are thinking, but we don't realize that some of these products, they're in Australia, Canada, Indonesia, okay, South America, Poland, okay, Switzerland, Amsterdam. We can continue. The more of the story is this type of product, or trying to get some allocation to it, to companies that even actually buy and sell the stuff, or sell it just purely, the biggest actually thing is it's not just a US based trade. So we got to understand that going into the night, the Asian markets, the European markets, etc., that gold price or silver, etc., could be moving before the New York trading session. Okay. Now, we did some trades based upon what we're seeing in gold. I just want to take a quick look. Did we see any movement in silver yet? Or is it just gold? Gold had led. If we take a look at, let's say, silver here on the daily chart, it is a crossover in the shorter term. It actually has done a pretty good job. We kind of saw a stair step down, right? Stair step, drops down. Stair step, drops down. Okay? And kind of where do we think that resistance level is? Well, it's probably right there. And silver, if it's going to kind of go with gold tomorrow, Friday, if it does, we need to see that trading activity probably north of 35.50. Why does it matter? Well, because earlier this week we did a silver-based trade. And so I'd like to kind of see that, see if we can get a little follow through tomorrow. But we talk about after the close or in the pre-market tomorrow, not a bad idea to kind of check some of these. Speaking of that, I want to bring up just real quick sectors. We did see a little interesting activity today from the Staples space. Staples has been wholly sideways. However, there was a pretty good move in there today, and some of those stocks starting to look a little bit more bullish. There hasn't been a whole lot to talk about in the Staples space. We know that utilities actually pushed late last week to earlier this week, and now we're seeing maybe Staples, could they be starting to go back up? Keep an eye on Pepsi. Now, I do want to kind of say some of the negative. Some of the negative that we are seeing is financials. And if we look at financials, we've actually dropped down in price and kind of only went up for a day and then sold off again. Went up for a day and then sold off again. Now, some technicians really call this like a bear flat. This is where the price drops, right? And when the price comes back up, it doesn't really come back up that much. And so like a classic bear flag would be that it retraces up off that low point. Well, kind of a worse setup is when it drops down, makes a low, and there's not much of a retracement off the low. It almost pins sideways. Some of those financial stocks do not look really that healthy, okay? So be careful in financials there. Now, I want to kind of also point up just real quick, when we talk about, let's say, gold, I want to bring up the example just real quick, and let's pull this up and talk about this, okay? So when we do this after hours, I want to talk about the stock prices, but maybe even also past positions. We need to talk about them because a lot of times in the afternoon, like right now, might take a little break from our day and see what's going on with some of that financial capital and paper money. Now, the example that I'm going to pull up just real quick, and we're going to run through these quickly and talk about some new positions as well. We have the AM position, which is a covered call. I'm just going to briefly touch upon this. The AM, that was actually the stock, and I'm going to pull that back to the first chart there, and I'm going to close that up, and I'll make sure that there's no bubbles because we talked about those before. So let's just get that off. There we go. Perfect. And now we just got to, let me take the volume off. I know some of you want to see that. I'm going to kind of close that down right now so we have a little bit more room up top. Now, what I'm going to do, don't look at hood. We talked about that earlier, AM. Now, AM has actually been one that's had a pretty good push. That doesn't necessarily really completely matter if there's a capped gain strategy. Briefly, when we take a look at this position we've been talking about is the covered call. The shares were purchased at 120, and actually it has an upside cap at 135. So we know that there's $15 there, okay, on the stock. Also got 263 here, okay? And remember, after the close or in the pre-market, it's not just talking about buying stuff. It's about where these positions are and is there opportunity to profit take on some of these positions. If we look at the stock max gain, $15, okay? And the 263 represents the option premium. So the most we can make on that position in the paper money count is 1763. Where are we now? We're at 1158. So we're at 1151. We're at 1151 of 1763. And what you're going to see is what percent do we have? We pull it up, 1151 divided by 1763. We're sitting here about 65% of the maximum gain. Now, I don't know what percent you like, okay? Now, some people say, look, James, I want 80%. Some people say, James, don't be greedy, okay? Take 65. AM is there at 65%, assuming we could get out. And if we take a look at also kind of one other position that we'll just bring up just briefly is the NEM. NEM might be a little bit more capped out than AEM. What do I mean by that? When we look at NEM, it's from 50.77 up to 65. Okay? So that, well, I'll write it down so we can follow along. But if you take a look at this, there to there, how much is that? What is that, 14.23 or something? 65 less 50.77. Okay? And if we did that, 50.77, 14.23. I'll write it down there. All we're doing is looking at the difference between the stock price, where it was entered, the trade, where do we buy the stock at in the paper money account? Where's the cap? 65. The difference there, 14.23. We got $1.75. Where's that coming from? The option premium. We're going to add those two together and say, what's the grand total? Answer, $15.98. Why do we care? Well, we're not in the business here in the paper money account of just buying stuff. It's buying and selling stuff. It's buying and actually realizing when the window of upside is closing. So now we actually look at this position right there, 14.47. 14.47 divided into 15.98, what does that tell us? Well, if I type that in, what percent do we have? 15.98, and it's sitting at 90.5%. Oh, just rub it in. Well, no, we're not trying to rub it in, but usually if it just means we're getting even closer to 100%. So we can only make on that position $150. So you tell me what you would consider. Would you try to stay in this position and try to make another $150, or would you actually try to grab that 14.47? Now think about how foolish this is. $150, that's what the reward is. Reward, R-E-W, and the risk is, if I lay it out like this, I want this to really sting a little bit. The risk is that you give all the 14.47 back plus more. Now, how many of you would say if someone called you up and said, hey, I got a sweet trade idea, you can make a potential $150, but the risk is you could lose 14.47 and more. And then you hang up the phone and said that reward to risk ratio is like a 1 to 10. Matter of fact, it's even worse than that. So many investors, remember, we're talking about after the close, are there positions that should be closed down? Now, you can't close a covered call down. But the one thing to kind of point out, and when we say you can't close the covered call down, we cannot get filled on an option. Could get filled on the shares, perhaps, if that shares was traded. But we're not trying to do that because we also have a short call as well. Could you imagine a time where those options were traded, maybe pre-market, post-market, like the stock? Boy, that would be interesting. Now, what I'm going to do to set this up is I'm going to right-click on that NEM, create closing order, going to sell it, okay? Now, so going into tomorrow, okay, many traders might say, look, I want to make sure that this position fills so I don't forget. Now, what do I like to do? I like to kind of put it on my calendar and say, hey, XYZ trade, DEF trade, whatever the symbol is, hypothetically, I want to make sure that position is filling. If it's not filling in the first 5 minutes, I want to know why. So going into tomorrow, we already kind of have some trade ideas of what could be closing and opening. Now, on this, what we're now going to see is going to go to that, let me unclick those. Yep, there you go. Let's highlight those. Create closing order, sell. And now what we're going to do is close that. Now, that has 90% of the max gain. The other one is 65. Maybe we could get the AM to go up a little bit more, but in this trade example, I'm just going to close the NEM. Now, the comment, when we kind of take a look at this, okay, this is buying the callback first. Now, I like to kind of think of this like maybe real estate, if you will, rental real estate. We're trying to get the obligation off first. We're trying to get the tenant to move out first, the short call, and then sell the shares or the house. That helps you? Go for it. Okay? So here we're trying to get out of the obligation to deliver the shares at the strike price, the obligation, and then once we get out of the obligation, then sell the shares. Okay? What we're going to do is confirm send. There you go. Now, here's the problem I want to kind of restate to you. This account is sitting at $58,000 of $112,000. So if we sell these shares, it's going to add on about another $6,900. So what's starting to happen here? Well, what's starting to happen is you got this big pie of $112,000. And what's happening is we start selling these positions, and it's like, wow, it's so great, it's so great, it's so great. But what happens is a large chunk of the pie is becoming cash. How much money does the cash make if it's not invested in something short term or whatever? Not a whole lot, okay? So the problem now becomes is, are there any other trade ideas where we could try to use the cash, okay, and try to make a return? Now these positions right here, just to kind of point something out for just a sec, 1151, 1447, that's about $2,600. $2,600 if you back these trades out on an account that was probably sitting at, if I back them out at, let's say 110,000, these two trades move the portfolio, just two trades, push the portfolio up 2.5% on two trades in the last how many weeks? Well, how old is that trade? That trade came on the 18th, okay? And then it was covered called on the 31st. So answer, 2 weeks, okay? Notice that right there, that 120, where'd that come from? A cash secured put. Which, by the way, Cameron teaches that class on Monday, okay? So there's no excuses. Cameron's setting you straight. Right, Cameron? I love it. Now, here's the deal. This position, longer, April, okay, it was the first, secondary added, and then cover called. So those were shares initially, but then later was cover called. So that one took a little bit longer. Now, I want to kind of go back to something just real quick. Are there any new positions that kind of stood out a little bit? And I want to go back to Google, okay? Now, if you take a look at Google, Google's been actually one that's actually been going up a little bit. And what you're going to now notice is, if you take a look at this, you're now going to see that when you pull this up, Google has actually been one that's kind of going up to like a longer term area of resistance. All right. Now, if you go back and look at this, we're going to ask this question. What is your favorite price pattern? Is it a bull flag? Is it a double bottom? Is it a cup and handle? Is it a V pattern? And I know what you might say, James, you've just said all my favorites. So maybe it's not a great question. Now, if we take a look at this, I want you to kind of notice something where you have that prior high and it's kind of arced its way back to the upside. Now, we cannot say this was a V pattern because it was kind of like arching. You know, when we talk about V, it goes down straight and then goes up, maybe it's just as fast. It's not a V pattern. It's kind of more like a U pattern, just grinding. Now, if it's more kind of like a U pattern like that, we would say it's more of a cup. Now, the reason I'm bringing up Google is Google has actually been kind of cutting some headcount of employees, and I know this sounds horrible, but sometimes when companies eliminate positions, I think it's the HR terminology, and reduce headcount, okay? Which always makes me think about cattle, but it's not talking about cattle. But anyway, the language is awkward. Isn't that awkward when you read that? You're like, wait, this is awkward, okay? Now, if we take a look at this, we're going to go to the weekly chart, 3-year weekly, zoom in on this. We've actually kind of had some double bottoming, which you can see about right at 150-ish. And we've taken another run back to the upside. Now, the one thing to kind of point out here is The MACD has actually stayed up here for quite a bit of period of time. Okay. Now, what's a kind of a sign of a bullish trade? The MACD's rotating up and or staying up, even though the price is up near the highs. Now, if you pull this up, I'm going to go to, let's say, the daily chart. You're going to see on the right-hand edge. And again, imagine we see this in the after hours. What stands out? Well, first off, old resistance is still holding as new support. Second, what's standing out to this in the after the close segment? Well, after the close is that turn green, this turn green on the 20-period moving average. And some technicians, they might like that lower shadow where we close up near the high of the trading session. So if this actually opened up higher than where we were today, tomorrow, well, that would be just a gap, okay? If we closed above today's high, that would be a brand new close above the high of the low day. Now, one of the things we want to kind of consider is in the after the hour session is setting up orders, buys or sells for tomorrow. A lot of times people like, let's say, the afternoon better than the morning. Why? Kids, dogs, right? Emails, making breakfast, whatever, okay? Personally, I don't care what type of day, what time of the day it is. If it's an uptrend, anytime there's an uptrend, wide open, okay? Now, here's what I'm going to do. What some investors do in the after hours is they'll say, hey, look, I'm going to try to get in. Let's imagine the investor says a stock trade, okay? Why are you saying stock? Well, because remember, we got quite a bit of cash, and the one benefit of many is with stock trades, it's capital intensive. We're trying to use some of that capital. What I'm going to do on this trade is we're going to right click on that right above today's high, go buy custom. We're going to go with OCO bracket. Now with OCO bracket saying, look, first we got to get in. Second, we're going to have a target and a stop. Now what I'm going to do on this is we're going to set that stop underneath, and I'm going to kind of use the midsection of this big, large green candle, which is sitting here right about 192.62. 192.62 less 2%. It's going to give us 188.76. So if I type in 188.76, there's the stop. Now remember, that is saying if it goes down to that price, that's a trigger to sell. Doesn't say that's actually where it's going to sell. It's a trigger to sell. It's undefined where the sell price will actually happen. This is not a put. It's not a bought put. We're going to go stop date GTC, and that's a risk because we don't know where the stop price is going to be in terms of the fill. That's why the position sizing is so critical. Not getting too big, okay? Making sure it's not too much capital. Now, we're going to go back. Now, this is where sometimes people say, well, I get bored by doing the same things over and over again. Well, that's called discipline, okay? So if we said, hey, when we started the year, we said no more than 5 to 8%, even if we went 6.5% of this portfolio, 112,000, let's say we took 6.5%-ish, kind of right in that range, $7,200 of stock. We would never say language like, oh, I'd like to do this, I'd like to do that. That's where you get in trouble, okay? So it's not what the paper money account likes to do, it's what it's able to do, okay? Now, what you're now going to see is 72.80. Going to put that in right there, 72.80. And right above that dollar sign, we're going to click on the little red chain. Now, once we do that, $7,280, it's going to be 36 shares of stock. Not a problem, Silas. Now, have a good night as well. Now, what we're going to do is going to go daily GTC. I need help from you to say, where could the target be? Now, we can go back to the target for just a second. Could the target really just be the prior high? It could be. Probably it's not going to be enough. You might be thinking, James, if we were to go to the upside, and there's many stocks that are going to the upside, you're now going to see, now I'm not going to take it down to the very low point. If we take it down to the low point, I don't like to draw support and resistance off a touch. We want to draw them from where we have multiple touches, where the statistical accuracy of multiple touches at a spot on lows or tops is more likely. if we draw from highs to lows, you're really kind of doing outliers. It happened, but it didn't happen frequently. So what we're going to do is kind of take it from about, let's say, the 200 down to where we got more touches. Now, what that's going to do is it's going to give us an, now I'm just going to kind of show you some things that I like to look at. You might say, well, James, I'm going to look at the 161 extension at 232. Fine. A lot of times when you look at that, if it were to break out, it seems maybe like pie in the sky. Like, how could it go from 200 to 232? The higher it is, the less probable it becomes. Wonder if you're a trader that says, I would like to do something that has a higher probability. That doesn't mean it's going to happen, but it's just a higher probability. Well, some people kind of like to split that and just say that that's what the 131 is. The 131 is really kind of saying, look, even if I went halfway to that goal, I'd be happy. I say I would be happy. I'll have to see then if I'm happy. But the biggest thing is we're going to put that target right at 216-ish. I'm going to put it right at 216, okay? Now, if you said, James, I don't even know how did you put the 131 on there? When you draw a Fibonacci, draw it, right-click on it, any of the lines, it doesn't matter, right-click on it. Then we're going to go to Edit Properties, and now what you're going to see is the coefficients, the slope coefficients. And now what you're going to see is that you can actually take one of the, you might have like a 261. You could take the 261 out and just put 131, okay? That's all it is. And so you might have like 1.618, and you could just put in one here, 1.3. And that's just splitting the distance between the 1 and the 1.61. That's all it's doing. And it's drawing the line for you. That's all it is. Now, and you could save that so next time when you draw it, that line is there as well. So let's put that there. And that target again, 216, there it is. We're going to go confirm and send. This is going in the IRA account. Notice it's shares of stock. Now, the one thing that we did say that I want to change that I don't like is this is going to be a stop order and day to GTC, okay? So this is saying, look, if it goes to that price or higher, this could be breaching above where we've had the consolidation over the last couple of days. I'm telling you, this is probably one of the least used orders. A lot of people like to buy at the market price or limit price, this or lower. I think the probably order that's least maybe understood why someone uses this order or something like it is you are trying to catch the breakout. Now, a lot of people don't like this, okay? If you said, I like this, but I don't like not knowing what I'm buying it for. Now, I like to think of this like a check, right? You say pay to the order of, Google stock. I want to know that it can only be so much. Well, simple fix. Stop. Let's put a limit. So now all of a sudden, if we go stop limit, we're saying, look, get in if we go to that price, but do not cash that check, or I'm not willing to pay for it if it goes any higher than 198. So I'm trying to give you some analogies so it sticks. So the price of that buy stop is really saying, look, if it goes to that price or higher, this could be bullish. And the investor is okay to buy it up to this price, but no more. You're allowed to buy in this range. But if it gaps to 198.01 and never comes back down inside this range, it doesn't fill. Shouldn't fill, okay? So that's the risk of that order. If it gaps and it never comes back down, you could say, man, I was dadgummit, I was right there, but it had a big gap and I wasn't watching it, okay? Now, confirm and send. We're going to put that trade on, okay? Now, I'm going to send that order. Now here's the Josh actually, Scott says, I really like using that type of order now. The only negative I've run into a couple times is the order, the buy right on the open, then quickly retreat, but that's what the stop was for. That's true. So you got to kind of remember something for just a moment. Let's say let's say there's 1,000 orders out there, and the majority of the orders out there are, let's say 70% of them are bullish. But what happens is they kind of fill the orders and it pushes up the price, right? Well, once those orders kind of fill on a majority basis, if they're bullish, the price sometimes tends to retreat a little bit, okay, after those orders are filled. Not always, okay, unless we get some new buyers adding some positions. So just because, let's say, the stock fills, let's say in the morning, that's not guaranteeing it's going to go up higher. It still can go up and down and vacillate in price after the purchase is made, clearly, okay? So that's why the investor is saying, how you're understanding how much risk are you willing to take, okay? So we're going to go ahead and send the order. Now, here's the deal. Now, this kind of brings up the major question. If you know that a lot of those orders tend to fill in the morning, then the question might come, why is the investor just buying in the morning? Why not try to buy into the close and see if you can't get the pop in the morning? And some people try to use the pop or the gap up in the morning to sell into the strength in the shorter term. Well, Scott, I know you already know that. But it begs the question. If you kind of see that repetitive pattern in the morning, why don't you look for the stocks in the last 30 minutes, last 90 minutes of the day, kind of ramming into the close higher and try to get the gap? Have you ever kind of just barely woken up out of bed, you look at your phone, you can't even read the screen, you're like, man, Apple's up $4, I just woke up, okay? Now, that doesn't always happen like that, but that's a nice way to wake up if you own a couple shares and the stock gaps to the upside, and you're already on it, okay? I'm just saying, just hypothetical. Imagine you had a friend do that, okay? Now, we're gonna go ahead and send that order. Now, the other one I want to, and I'll fix that. The other trade I want to go back to for just a sec is I want to go back and look at Dash. Now, Dash, again, I don't think a lot of people quite understand what do they actually do, what have they been doing, what are they doing now, who are their competitors, et cetera, et cetera, et cetera. Well, DoorDash, if you take a look at this, had a pretty big day, big rally to the upside. Let's go back to the trusted envelopes. Now, those envelopes have been tried and true. The blue line is your 10-day exponential moving average. It can act like support. What we've been harping on gently has been saying, look, if you get the yellow line is 3% above the 10-day moving average. Many investors are trying to buy right in that sweet spot in between the yellow and the blue lines. Why? Because it's close to support. Now, once you start getting the 5% above the blue line, the red line, it's getting a little extended, okay? And where the alarm bells go off is when you touch the white line. Think of this like standard deviation. You say, how far are we going away from the average? Well, when you get to that white line, I mean, it is baiting investors to just take profits. The likelihood of mean reversion that it comes back down becomes extremely high, okay? And today, again, we saw that. So you might be thinking as a trader, man, if I own a stock and it gaps to the upside, gets to the white line or trades above that, some investors might say, I'm going to sell some. If you said, James, I've had plenty, you might say, James, I'm going to use that pop to sell all of my shares. If there's a high probability we could come back. This is another example, okay, of that white line kind of showing that type of activity. Now, DoorDash. On that type of trade, if we go back and we look at analyze for just a moment and talk about this, and we look at the fundamentals. Now, what we've kind of been saying is if you've ever gone into a restaurant, okay, just different types of restaurants, they really actually they connect merchants, stores, restaurants, et cetera, to consumers, and they do order fulfillment, okay, demand generation, merchandising, payment processing, et cetera. Now, one thing that you're going to notice is many investors, they like to find companies that might have struggled historically and are now starting to turn profitable. Now, lo and behold, in 24, they've turned profitable. Now, this is just kind of like when you first got married. Now, if this didn't happen for you, you're lucky, okay? Most people kind of get married and they're spending more money than they're making. They don't have a lot of assets. They don't have a lot of cash flow. And companies are the same thing. it kind of takes them a little bit to kind of build their business. They have more ideas than money, and maybe the market has not, let's say, adapted their products and services yet. And it costs money to grow, right? Now in 24, they went to 29 cents total for the year. Quarterly, if we look at what's happened in the last 2 quarters, we've actually seen 33 cents. But in the last quarter, they went 44 cents, the highest they've ever been, at least from what I can see. Now, what we're going to show on DoorDash, DoorDash is not like Google where it might try to pop to the upside. I'm just going to kind of look at this one quickly. But on this one, what we're going to look at there is we're going to go back to the dash, and we're going to kind of look and see what are the options looking like currently at the close, okay? Now, the information we're talking about here, the market is not actively trading the options. The options bid-ask spread might be a little wider. Notice when we look at the volume right there, we can still see the volume kind of tick a little bit. The bid-ask spread is about 56 cents wide, so it's not really active. If we go look at something like Apple, that is 22 cents wide. And if we look at the volume, not moving a whole lot here, a little bit. We can kind of watch that. But yesterday, it had a 6 cent bid-ask spread. 2.5 hours after the market was closed, it was still actively trading. So some stocks trade more actively in the after-hour, pre-market hours than others. Okay? Just want to kind of show you that. Now, on the options, we're not talking about getting these filled in the after hours. These are orders set up for tomorrow. Now, the volatility on this is 37 or so. What we're going to show is trying to do an example of, let's say, selling a 250 and then buying, let's say, a 240. We sell the put, buy the 240. That's just a classic put spread, okay? Now, the investor might ask, well, why a put spread? Well, the whole purpose of the put spread is it is less sensitive to direction. So if it's not sensitive, it's just less than what? Shares of stock. So if we actually said, hey, if this stock came down a little bit, it's not going to kill the position, but it would be down most likely. But we're going to try to give some breathing room for the stock. This is saying, look, if the stock can stay above 250, have downside protection of 240, got a credit there of 174. We pull this up, what you're now going to see is we can see. Now remember, when you go farther down on the option table, it makes it where you get a smaller credit. The delta that we're looking at only has a delta of, in this case, 23. Now, I want to show you this on purpose, okay? Some investors, they like to even focus on 20 deltas. When you focus on 20 deltas, it changes that ROR, reward on risk percentage, but I want to show this. 99% of all of our examples are probably with a delta of 30 to 40, okay? But some have asked, could you show examples of doing trades with lower deltas or probabilities of being in the money at expiration? Sure. Now, what I'm going to do is note that we're going to sell that in this example. And then what I'm going to do is we also have a commission as well. So note that. So I want to kind of show that because one of the things you'll notice if you've been in restaurants, I know a lot of you have said, James, when I went in a restaurant, like someone's there to pick up food for somebody else. Okay. It's very interesting. I think it's a trend that maybe we're not fully really interpreting. Now, if you're like me, you say, well, why don't they just come down and get it themselves? That's not the purpose of this class. All right, now, so let me kind of just do that just real quick. I'm going to put that, let me put that back. So if I do that, 250, 240, I think is what we had. And I'm going to do that just so this for sure fills. I'm going to do just that. And so that was the trade right there. So there it is. It's in the paper money account, credit less commission, okay? Send the order. So that's going to try to trigger. Now, what's the bad part about this? Should we just assume that this trade is going to get filled? I put my order in. How come it didn't fill? Well, we don't know where Dash is going to open up. If Dash gaps another 5 tomorrow, am I expecting this trade to fill at the credit that we want? No. Okay. Now, you can do what you want, okay? I just want to offer that. But I think the one thing that some investors kind of need to get familiar with is, like mobile, Thinkorswim Mobile, which I did a couple classes on. You could go right to. Let me show you this. If you're not familiar, so if you went to, let's say, our Trader Talks channel, and you said, James, I already subscribed already. When you subscribe for free, all you got to do is press one button, okay? Which will be right in the middle of that page. This page right here, let me send this out to you, okay? If you have not subscribed, you can just click on the subscribe button. Right below that, I don't think a lot of times we see this. This right here will search anything that's on our channel. So if I said, I would like to learn about mobile, okay? Thinkorswim Mobile, okay? Now, if I did that, what you're now going to see is anything that talked about Thinkorswim Mobile, okay? Anything. Moving to Thinkorswim Mobile. Lesson 3.8, Guide to the Thinkorswim Platform Trade Tab, okay? Getting started with Thinkorswim. That's like the software. Getting started on Thinkorswim Mobile, okay? These were bite-sized classes that we actually did. And it will also give you a playlist from Thinkorswim Mobile. Now, if you said, I'd like to learn about trading options on mobile, right there, trading options on mobile, okay? Trading on the go, monitoring your portfolio on the go. What if I like to do advanced options using mobile, okay? What about single options, okay? What about more advanced options on mobile? So there you go right there, okay? Now, Cameron and myself, we've traveled a little bit. It is really interesting to see. The mobile actually does a lot. Now, by the way, if you had like an iPad or a tablet, this is showing both, not just phone, but also iPad. Okay, so if you said, I don't really use my phone that much, I carry my tablet, I do my work on it, things like that. Those mobile presentations, we actually show it on a phone and iPad. So if you haven't done that, it's important. The reason why I bring this up is if you're doing the orders at night, but you're maybe on the go in the morning, I got an appointment, whatever, sitting in the office, and you're waiting, man, Thinkorswim, you don't have to sit there with your bulky computer on your lap, okay? That's what the tools are there for, okay? Now, what I want to do is also kind of go back to, are there any questions that you have, okay? Now, I do want to kind of make mention, I'm going to fast fire a couple stocks that we're going to continue to watch. Palantir, I'm just going to set it up. When we talked about kind of the new asset class, right? We said we're going to keep an eye on Palantir and MSTR. MSTR, if someone says, James, my style of investing is I like to look for stocks that have pulled back down to support, and I like to see the MACD starting to rotate back up and maybe start to get a brand new moving average crossover. The reason why I bring up MSTR is this historically has had a correlation to that new asset class like Palantir, and it's kind of sitting close to support and had a pretty good pop here this morning. A gap to the upside, rally, did not close at the high, but it was actually still pretty close to the high. So that's going to be something that maybe some investors might really watch. Now, Chuck actually says, James, can I have your column layout for scanning? So I think you're referring to Chuck, just kind of work with me on this. So when you talk about the columns for scanning, like you're talking about these columns right here. Now, when you're saying scanning, this is kind of like update. These are scripts like that are updating throughout the market day. If someone said, well, where do I get those column headings? Those scripts, so you could put those on yours. Now, Chuck, work with me. Let me know if that's what you're thinking. If I went to, for example, X, okay? Now, I had a guy, partner. They actually saw my stuff. They do a lot of stuff, and they talked to me and they said, we're just absolutely dumbfounded. That's some of the best stuff we've ever seen, and we're completely dumbfounded on why you give it away for free. Yeah, good question. Okay. I really don't think people understand. Some of you do. Okay. This goes, I used to teach searching, which is, think of another way to say scan, for probably over 8 years. Okay. I've seen more searches and scans. I've seen them all. Okay, a lot of them. I won't say every bit of them, but these right here, these different scripts, these scripts are not guaranteed for accuracy. You said I want the 1 week percent. That in blue, you can't copy and paste it. You just type it in on the chat. Okay, you type it in when you go to. Now, I'm going to just slide this page over. Okay, so I'm going to slide it over, and I'm going to wrap this up. But if you said, James, some of those scripts kind of interest me. So what I could do is I could go to the very top right, open shared item. So what I did is I just kind of put my X page just on the right hand side. And all I'm doing is I'm just typing in any script that I want, little exclamation point, AKQWM6YN. Now it is case sensitive, okay? So if I don't type it in right and I go preview and it says link is broken, you need to really double check, did you type it in right, okay? So that's how you put them in. You just type in what is in blue there, okay? Now, that is another way to say after the close to like scan a watch list. And then that watch list actually turns into something. What are maybe some potential ideas going into tomorrow? Okay. So I'm out of my time here today, but I want to kind of end on that. I want to say thank you for Kevin normally teaches at this time, but he's at the New York City workshop, the in-person event, which you can find those right on schwab.com/coaching. And just know that will be New York this weekend and Chicago next weekend. Want to thank Cameron for answering those questions in chat. And with some of those things we discussed, I think that was a timely discussion on some of the things we brought up here today. I will teach ETFs in the morning. Cameron will be back on tomorrow talking about advanced charting as well. So join us tomorrow morning. With that said, this has been the session after the close. This has been recorded. Wish you a great afternoon. I'll see you back tomorrow morning. Take care. Bye-bye.